thanks so much for coming out tonight. My name is Rich. I'm part of the Core team. Core is an L1 blockchain powered by Bitcoin. It's got the most liquid BTC-Fi ecosystem, and then it's also got the largest Bitcoin yield product. And we're here to talk about chipping away at some of Bitcoin's biggest challenges. So this is a chart that most people in this room are probably familiar with. So this is the Bitcoin halvening. And every 4 years, the Bitcoin block reward is cut in half. And this is something that we've all enjoyed seeing for many years because this is where Bitcoin's perfect scarcity, based on its algorithmic monetary policy, has become so famous. And it's been one of the reasons that Bitcoin has accrued so much value over the last 15 years. However, if you hold all things constant, when the halving occurs, Bitcoin miners' profitability decreases by 50%. In the last few halvenings, we've been able to more than 2x the Bitcoin price, so it's more than made up for that. But the question is, how many times can we do that? And this isn't a problem that we have to worry about 20 years from now. We really have to worry about this problem maybe the next halvening or maybe 2 halvenings from now. Because if we lose the security of the Bitcoin base layer, in my mind, most of crypto comes into question, where Bitcoin is the base layer asset that so much of crypto has been built upon. And there's been an explosion of new technologies, many by innovators in this room today, like Bitcoin L2s, where if we don't solve this, things like cross-chain MEV, all sorts of things could open up if we don't solve this. So it's probably the biggest problem in all of crypto to go solve. Core is playing its role in it, and I welcome everybody in this room to also help play a role. Before we talk about the problem and some of the solutions a little bit in more depth, I'm Rich. I've been part of the Core team for the last several years. Before that, I was at Coinbase. I led money movements engineering over there for about 4 years. And I've been in Bitcoin since 2013, AKA a Bitcoin maxi. So this is a problem that's very near and dear to my heart. So if we dive into solutions that are kind of in the historical mindset, so there's been 3 that people have brought up. There's been adding tail emissions, there's been switching to proof of stake, and then of course relying on transaction fees, which is where we eventually have to get to. There's a bunch of long tail other ones, but these are probably the 3 to focus on. So when it comes to adding tail emissions, one option would be we just stop having halvings. And what we do is we just have the Bitcoin 21 million meme go away, and we have infinite mint Bitcoin. And at least in my mind, getting rid of the perfect scarcity of Bitcoin would destroy Bitcoin. So it's an idea that many people have brought up because it seems plausible in some ways, but I think the underlying meme of Bitcoin, its perfect scarcity, is one of the main pieces of why Bitcoin is so great. So another option is we move to proof of stake. So we did what Ethereum did back in 2020. So you say, hey, miners have this problem, let's just get rid of the miners. And I think we saw that that was a really rough patch for Ethereum. And the move to proof of stake is still up in the air in terms of how much benefit that really brought to Ethereum. Yes, the native yield wound up unlocking a lot of DeFi use cases, but there's so much centralization. There's 3 block builders in all of Ethereum that make up 90+% of the blocks. And proof of work is really what makes Bitcoin special. There's really one dominant proof of work chain, and it is this amazing piece that unlocks so much of crypto. I think if we get rid of proof of work in Bitcoin, once again, we probably black hole Bitcoin. So the final one is transaction fees. So this is where we have to get to over the long run. There needs to be long-term economic balance in Bitcoin. However, if we look at transaction fees historically, we haven't ever been close to a long-term sustainable demand of Bitcoin block space. And of course, there's ordinals, runes, BRC20s. There are these times when we get there, but we need to get here over the long term, and it needs to be sustainable. So again, this is something that we all should be working towards, whether it's more Bitcoin transactions, Bitcoin for DA. All these things can help play a role, but I don't think we're close to being there yet. So with all this bad news, where does that leave us? Well, Bitcoin actually has a lot to offer. So proof of work, again, is this unique security model. It has an untapped yield market on $1 trillion asset. Very few Bitcoins are being put to work today, and especially in any non-custodial way. And then finally, it's $1 trillion market cap coin that actually has very little utility today outside of digital gold. So we can also build more use cases for Bitcoin and help unlock it, which should accrete value back to Bitcoin. And this is why Core exists. So Core is here to help put Bitcoin to work. So there's over 55% of the Bitcoin hash rate that's currently secure in the core chain and is receiving core block rewards for doing so. There's over 330 million in Bitcoin that's staked non-custodially on the core chain. And then finally, Core has the most liquid BTCFi ecosystem with tens of thousands of daily active users and hundreds of millions in TVL. So trying to address 3 of those different pieces and how Core can all put them to work. So let's talk about proof of work and how that plays into Core. So Core was originally designed to be a second block reward for Bitcoin miners. And what we mean by that is, again, as we need to rely on transaction fees over the long run, Core's second block reward helps smooth that profitability graph over time. So as Bitcoin miners produce blocks on by solving SHA-256 puzzles on the Bitcoin chain, what they can also do is add a little bit of data to those blocks. They get trustlessly relayed over to the Core chain, and they receive Core block rewards for doing so. And Bitcoin miners are critical to Core's Satoshi Plus. So there's 3 ingredients in Satoshi Plus. There's delegated proof of work, Bitcoin staking, and Core staking. And all 3 of those is how our validator set gets elected. And the idea is you get some of the scalability and more Ethereum-based properties on the right and middle section, and then you get the decentralization security on the other side. But all of them are very critical ingredients in Core's DPoS soup, if you will. And again, there's over half the Bitcoin miners currently securing the chain, but there's a lot of work left to be done there because, again, we're just over half. There's still 45% to go. Let's talk about Bitcoin yield. So again, one of the pros of Ethereum moving to proof of stake was they have native yield now embedded in the Ethereum ecosystem, and that really led to the second wave of Ethereum DeFi. Having native yield opens up so many other opportunities beyond just block rewards. So if we think about Bitcoin miners, historically, they've been Bitcoin's biggest sellers. So as these Bitcoins get brought into circulation, what they do is they have to sell these Bitcoins down or hedge against it in a variety of ways to avoid selling. But the idea is they put Bitcoin into circulation to sustain operations. Now with Bitcoin yield via Core's non-custodial Bitcoin staking, you actually have another tool in your toolkit. As a Bitcoin miner, you can actually earn yield on your treasury by staking your Bitcoin non-custodially. So again, you never give up custody, but you can earn additional yield. And that's, again, another tool in the toolkit to help you, again, stay more profitable and have additional longevity as a Bitcoin miner. So how does Core's non-custodial Bitcoin staking work? So it's a time lock on the Bitcoin L1, so you never give up keys. You never send it to a multi-sig. It remains with your custody the entire time, which is really critical because Bitcoin miners are some of the most security conscious, risk conscious people in the entire Bitcoin space. And there's, again, I think it's now about 5.6 thousand Bitcoin that are currently staked in Core's Bitcoin staking, passively earning yield. And again, it's the first Bitcoin yield product. So when we think about yield, this is something that everybody in this room should think about, is if you don't understand where the yield is coming from, in Core's case, again, Core block rewards, then you yourself are probably being farmed or you are the yield. So what Core has said is not only is it really easy to understand how Bitcoin miners or Bitcoin holders receive yield by staking their Bitcoin, but we wanted to find ways to increase the sustainability of that yield over the long term. And that's where dual staking comes in. So very shortly, as a Bitcoin holder, you'll be able to stake your Bitcoin for one rate, but if you want to stake your Core in addition to your Bitcoin, you'll earn much higher rates. And what we're trying to do with dual staking is blend the Core community and the Bitcoin community, because this is what Bitcoin alignment is all about. It's about merging the 2 communities, opening the Overton window of the Bitcoin community, and helping them get more involved in these other ecosystems to earn additional yield on their Bitcoin to hopefully stack more Bitcoin. So let's talk about the Bitcoin miners again. So now as they receive these rewards for helping to secure the Core chain, they actually now can stake it. And if they want to dual stake it, they can actually earn additional rewards on top of it. So looking at the completed graph, now they have a choice. The choice is, if I need to go pay my OpEx, I can sell Bitcoin, I can sell Core, or I can go stake Bitcoin and Core, again, giving you more use cases here to, again, give you more alternative sources of income as a Bitcoin miner to help smooth that long-term graph. But this doesn't just apply to Bitcoin miners. So anybody that's a Bitcoin holder, whether you're the smallest retail participant to the largest financial institution in the world, can now go out there and stake your Bitcoin or dual stake with Core to go earn passive yield. And this is a big unlock, not just for retail, but again, for some of these large financial institutions. So what Core brought to the market earlier this year was the first yield-bearing ETPs with Valor. And these are Bitcoin ETPs that are live in Europe. We'll take some of these throughout the rest of the world later this year. But what we learned, again, with the advent of the spot ETFs in the US earlier this year, Wall Street loves spot Bitcoin ETFs, but they won't stop there. There's going to be yield-bearing Bitcoin ETFs, and Core is here to power it. Finally, let's talk about BTCFi. So BTCFi is another problem that, again, many in this room are thinking about. So again, Bitcoin is this massive asset, $1 trillion plus today, probably 10 trillion in the next 5 to 10 years once it overtakes the market cap of gold. And so little of that is actually being used today. It's just kind of being digital gold, spent as a store of value. Nothing wrong with that, but what if we can actually bring this into more active use cases, which again should ideally accrete value back to Bitcoin itself. And this is something that Core is also working on. So there's 100 plus projects that are already launched on Core. I think there'll be another 100 plus by the end of the year. But we're trying to work with many of these teams to find additional use cases, whether they're payments, DeFi, et cetera, to unlock more and more of the potential utility of Bitcoin. And if we think about how this is working so far, so Core's TVL graph has gone pretty far up and to the right. It's 100x in the last 6 months. It's showing early signs of product market fit, but there's a lot of work left to be done. And I'm happy to say that Core is #1 in almost every Bitcoin scaling category, and we're being pushed by so many amazing builders in this room, and we're trying to push the other builders in this room as well, because the only way we're going to get 10 to 30%, which is the Ethereum comp of TVL from the base layer asset into DeFi, is going to be by competing against each other. We're in this co-opetition mode where there's partnership angles on one side and competition angles on the other, but we all have to work together. And my personal bet is that if we all do our job well, the entire top 20 looks very different once Bitcoin scaling solutions really start to achieve product market fit. But it's not just about TVL. It's also about usage. And again, Core showing early signs of tractions here, but nowhere near the Web 2 comps that we need to get to. Because again, to unlock Bitcoin, we have to unlock millions and millions of users, maybe hundreds of millions potentially over time. And kind of summarize what I just said. So again, there's this major crisis that we all have to work on and we all have to do our part. Core is solving part of that problem, but again, we're going to need all sorts of other people that are also working on this, whether it's generating transaction fees, coming up with other Bitcoin block rewards for Bitcoin miners. But this is an urgent problem, probably the biggest problem in all of crypto for us to solve. And if I was to summarize what Core is trying to be, it's trying to be the proof of stake layer for Bitcoin. It's BTCFi on one side, it's Bitcoin yield on the other. And by creating this reflexive balance between these two pieces, it encourages the sustainability and long-term growth of both sides, which again is so critical. If you have to rely on exogenous sources of yield or these other things that might be more temporary, it's going to be very hard to achieve the level of scale that you really need to get to. So again, lots of early traction, but excited to be on this journey with all of you. And yeah, now is a great time to get involved with Core. Thanks so much.